Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. Lots and lots of stuff to track. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning. Well, the markets overnight didn't do too much, but the tweets keep coming in, whether it's from Mr. Trump, whether it's from Mr. Musk. Never a dull moment.
Negotiations on Truth Social. Tariff negotiations on Truth Social.
and the big, beautiful bill has now become what? Abomination, yeah, disgusting and all of that.
It's a
mouthful.
Exactly.
And what about Mr. Powell? He must be getting used to it, right? I mean, the data is weak.
Too late, Powell.
Let's just wait,
Yeah. Keep your thing going.
I think, as a news person, right, as news people, I think this is the best of times and the worst of times, right? Yeah. Because there's enough to do, maybe a little bit more, too much, I guess.
But you know what's interesting is I think while we obviously track every single headline, and we do, and markets also look at everything, I think what the last 10 days have told us, I don't want to jinx it, is that markets have started looking through a lot of this noise.
Yeah.
Whether it's here in India, whether it's around the world, markets just seem to be in a mood that they want to keep marching higher.
And at the conferences that are taking place, that's the sense you get as well, right? Yeah. He'll have to see something different or we'll have to require something new. Because as of now, this bad news at least is being digested. That's what it appears like.
Absolutely. As they say, markets don't fall on the same news twice. I mean, so we've had... let's hope we don't get something new. But let's just take it from the top then, right? And what do you need to know? So actually, last night, US equities were absolutely flat. Nothing really. S&P was flat. Nasdaq was up 1/3% higher or so. The major theme really was weakness in US data. So you had the ADP private payrolls number, which came through, which missed expectations. You would, more importantly, I'd say, you'd had the ISM services. Now, the services portion is the sticky part of any economy, especially an economy like the US, which is not manufacturing. It's all mostly services. And here, the ISM services number fell into contractionary zone once again. So those are, I think that largely was the broad kind of driver. And it really drove not equities, but rates. So you also basically had US 10-year yield, which lost about 10 basis points. That's a sharp fall to about 4.36%. Trump basically once again called how he's got these sort of monikers for people, right? He's saying, too late, Powell, to cut rates. He's unbelievable, essentially, according to President Donald Trump. Ties in with the fall in market interest rates, at least. Dollar index down about 0.4%, 98.8. Oil prices also came off a little bit, about 65 or so is where we left off. And there are some news reports which suggest that the Saudis want more supersized OPEC plus hikes in a push for market share. So the Saudis want to pump more oil, Saudi oil, and take more of the market. Remember, oil market itself is not growing, so it's going to be a bit of a battle in terms of who's able to pump more and sort of take away existing share. Just the other, of course, bit has been this entire battle around U.S. fiscal and the focus on U.S. fiscal risks. And it started yesterday morning. I mean, actually, when we woke up yesterday morning, there were those tweets from Elon Musk, right? Essentially opposing, he called that the bill an abomination. And then he said, well, come November next year, we're going to fire these people who are going to be voting in favor of the bill. And this is last night from Mr. Musk. He said, call your senator, call your congressman. Bankrupting America is not okay. Kill the bill. That is what is coming through from Elon Musk. And, it kind of raises the question, is this the first serious a crack in the relationship between arguably the two most powerful people in the U.S. administration? One, the president himself. The other, of course, not part of the government, but the richest person, of course, has been a big supporter, campaigner for President Trump. But we'll see. Now, the other bit, of course, came from President Trump, and this is with regards to Russia, Ukraine. And Trump essentially, in a way, broadcast loudly this bit, and it's kind of a bit of a head scratcher. And just see what he said. He said, I had a good conversation with the Russian President Putin, but it was not a conversation that will lead to immediate peace. President Putin, and very strongly said, and very strongly, that he will have to respond to Ukraine's recent attacks on Russian airfields. So, I mean, in a way, it's like, broadcasting something to Europe that, heavier, bigger sort of retaliatory attacks are coming. But in any case, this is what really came through. Let's just tie in the levels here now and take a look at where we are at. Yesterday morning, we kind of put out that the range is essentially what we are looking at, 24,462 and 25,116. This is the range for the market. As of day before yesterday's close, we had come closer and closer to the lower end of that range. And yesterday we got a bit of a bounce, about 70 points, a third of a percent higher. Now, you need to take out 25,116 for upsides. But before that, there is a channel resistance on the Nifty at 24,750, I think, which will confirm further upsides. Between where we are and the 25,116 level, there's this channel resistance, so keep an eye. Support stands at 24,462, and then the 40-day exponential is 24,324. For the Nifty Bank, support stands at the 20-day moving average, which is 55,216, not very far away, about 1% away from where we left off yesterday. And resistance here is the recent high, day before yesterday's high, which is 56,161. Very short-term levels is essentially what we're looking at. GIFT Nifty should give you a quick sense of where we are likely to start. It's almost unchanged. That range, I think, still very much is the case, and that range holds for now. Surbhi.
Okay, well, Asian markets are very, very cautious because of the weak data that we've got from the US, even though the US markets were willing to shrug off at least a bit of it. But if you're looking at Asian equities right now, whether it's Japan, whether it's mainland China, markets are down. The only exception actually is the Hang Seng, which is managing to track a little bit of a gain. The data points, just to put them all on the table, the specific numbers, yesterday's this private sector report, the ADP report, showed that payrolls have increased by only 37,000. The estimate was 110,000. So the gap is huge between what was reported and what was expected. Not just that, the previous month's number was revised lower slightly from 62,000 to 60,000. So even if you compare it month on month from 60,000, the number has come down to 37,000. So job market, of course, and we are waiting for this, official payrolls report Friday. We'll have the full picture. ISM. Services indicators coming into contraction zone, 49.9. The estimate was 52. So that was a double whammy on the macros that, of course, heals the dollar and, in part, the equity markets were reacting to. ECB is in the spotlight today, and all bets are that they'll be cutting rates by at least 25 basis points as they try and deal with this tariff onslaught from the US. And, of course, we're watching out for the RBI. Similar expectations from the Reserve Bank of India as well. On Friday, that is tomorrow, 25 basis points is what is expected. The market has been in a range now for over 15 trading sessions. It's about broadly a 500, 550 point trading range. And what we're seeing is that every time we approach the lower end of that range, there is buying emerging irrespective of the news headlines. And that's exactly what happened yesterday as well. Both the Nifty and the mid-cap index, of course, managed to chug along higher. Block trade action, OFS action will still be in focus. But I guess, Nigel, overall, the backdrop is not too positive this morning, not too negative this morning.
Well, that's right. It's become very, very difficult to look at the institutional flow numbers because on every second day you have a large trade, or every day, in fact. So yesterday, if you look at it on a market perspective, the Nifty went up and there was some shedding of open interest on the Nifty itself. So some signs for the market on the whole, some kind of unwinding of short positions is what we saw. What about positioning? Not too much movement both on the FI as well as on the client side. So as we've been saying in the last few trading sessions, the FIs, well, they continue to remain net short. Now the short contracts are at the higher end of the range, at around 1 lakh contracts. Even in percentage terms, it's at around that 83% or thereabouts. While clients, they've been building on longs. They are holding on to long positions to the tune of close to around 70,000 contracts or thereabouts. But today is the Nifty weekly expiry that plays out. So expect some kind of movement in the second half of trade, particularly at that 3 p.m. move is something that I'll be watching out for. And the PCR, that's at the lower end of the range, 0.73 approximately. Yesterday, the reason that I was saying that we could have a green day is because it was at the, totally at the lower end of the range that we see, at around 0.64. Now it's moved up a little bit, but still it's towards the lower end of the range. Why is that? We have, yesterday call as well as put trading that we did see. So this 24,600 call, 24,700 call, the call writers, they believe they're going to defend a higher level. So in case we do get past those levels, then in fact those call writers or the bearish players, they'll get trapped on the wrong side. However, the 24,600 put as well did see some kind of open interest built up. 40 lakh shares out there getting built up. 71 rupees is the premium that they were looking to eat. And these contracts expired today, which brings us to the levels. In terms of levels you're looking at, on the downside, 24,500. That's the first reference point you're looking at. And you know the bulls, what they'll want us to get past the 24,700, trend towards 24,750, because as of now, positioning is such that this level does get, held out. And the other, the positive trigger that you're looking forward to is the Nifty golden cross. That's important. The golden crossover is important because, in fact, that means that the 50 DMA is on the verge of getting past the 200 DMA. So we are very, very close to that mark. This could be the positive trigger, actually, that the markets are looking forward to. So keep an eye out on that. I think that 24,450 level should hold out in the near term. However, can we get past the 25,100? That's the important mark. This, however, is an important positive technical trigger. Stocks that I'm looking at, ABFRL, yesterday there was a large trade. The stock moves into the F&O band. We'll keep an eye out. Yesterday's lows around 73 rupees odd. We'll keep an eye out on this stock today as well.
All right, well, keep an eye out on those names as we start to trade. Now, American